Chapter 3 Going with Flow. Sentiment indicators describe market as whole and volume directly represents extent of trader participation. That means sentiment indicators gives us overall direction or overall view of market, and volume also plays an important role in how many traders are participating right now, where markets sentiments come from, and what it is good for. Very first market sentiment indicator was set by Charles Dow in early 20th century. Charles Dow introduced a Dow index. So in that index, he introduced a first sentiment indicator. So in that index, there were mostly uh, railroad stocks. Consulting market sentiment indicators might give you valuable clues. That means consulting these sentiment indicators can give you an important information. Following the money, breadth indicators. It measures degree of participation by traders. That means how many traders are participating right now. So breadth means the range in which price is moving, so that is breadth. Then breadth indicators include first the ratio of advancing to decline. That means how many traders are buying and how many traders are selling, so that is ratio of advancing to decline. Stocks that are reaching higher price than yesterday are called advancing. That means stock which are bullish are called advancing, and lower, that means which are bearish, are called declining. Viewing volatility, the VIX. You can create a volatility index for any security in which options are traded, although it takes a computational expertise. You can create a volatility index. Volatility index means the amount, the rate of moving of that stock. So you can create that, in which options are traded, although it takes computational expertise. That means you need knowledge for that. When VIX is abnormally high or low, you know it is right time to trade against the market. That means when VIX is abnormally high, that means VIX is too high, that means volatility is too high or it is too low. So you can understand that you get a clue about that is right time to trade against the market. That means it is right time for entry. So VIX is also important indicator. Leading the way with spikes. A spike is a volume number that is double or more the size of volume on preceding days. That means it is a sudden change in price. That means for example, if trades are if volume is 10,000 and for previous hour volume is at 10,000 and suddenly it reaches 50,000, so that burst is called spike. Burst in that sudden change in price, that is called spike. Volume spike is one of the occasions when fundamental information is complementary to technical observation. Volume spike is one of the occasions, that means it is an occasion when fundamental information is complementary to technical observation. That means there is a sudden news about a certain company or certain script, so it is also confirming the technical view. That means it is also confirming with chart or technical observation. So it is a one of the occasions when fundamental information and technical informations are converging. That means they are confirming each other. Tracking OBV. On balance volume is a single number representing cumulative volume. That means it is a cumulative volumes, that means it is total volume. So it is a total volume of certain period. So to calculate on balance volume, you add volume on days that close is higher than the day before. That means to calculate OBV, you add volume on days that the close is higher than before. That means in which close is higher. That means those green candles. So they are added, and subtract volume on days that price is lower than day before. That means those red candles are subtracted from those green candles, that is higher than and lower than day before. So it is a result of that. Contrarians and cranks. A contrarian is someone who has a fundamental reason for thinking that security is mispriced. That means a person who is not agreeing, or who is not what can we say, who is not in convergence with, or who is not accepting the price. So a price of that particular security is called as contrarian. Then enduring spikes. A price spike is equivalent of a tornado in weather forecast. That means these price spikes in charts are very unpredictable and dangerous, and they can lead you to hitting in stop loss. That means they are equivalent of a tornado in a weather forecast.